Welcome back, ladies and gents. I hope you're all having an excellent weekend. In today's video, we need to talk about the Bitcoin charts. Of course, taking a look at Ethereum and Chainlink as well. This is in fact going to be an extremely important update as Bitcoin bulls have finally risen from their grave, giving us a move deep into the previous range that we had before breaking to the downside. In yesterday's video, we started off discussing the 4-hour stochastic and speaking about this region here, the critical zone, which we had come back into and actually started to build a little bit of a base with a potential cross to the upside. So this was at least very good for some potential short-term upside to the previous range here. And we did also take a look and speak about the open interest. And that's exactly what we need to look at in today's video as well, because of the fact that we want to see if this move is going to be a sustainable move to the upside or if it is simply a move to stop out the endless short positions that did come in at these lows right here. We also want to take a look at the momentum on the medium time frames to see when they can potentially flip to the upside and give us a stronger, even stronger move to the upside here as well. Now we have come back, of course, as you guys can see, to the median of the range as well. We've got a point of control right above that median of the range. So we're going to get into all of this today. And before we do start, I would very much appreciate it if you guys left a like on this video and supported the channel by subscribing and clicking that bell icon. I would very much appreciate it. So thank you guys so much for that, and let's get right into it. So I'm going to start off obviously on the 4-hour time frame because that's where we started off yesterday. This was a very big area of interest for us on the stochastic because of the fact that, of course, we were getting that potential cross up. We did speak about that, and of course we did have some choppy price action inside of this region, but I do want to take it down to the lower time frames, the 15-minute time frame, to actually see how we could have potentially expected this move to the upside. Well, of course, as you guys know, I let you guys know yesterday that we did end up picking up some long positions at the bottom of the range as just a scalp position, closing that very, very quickly. And that was simply because we did come down to the bottom of our range. We did end up taking out the lows and confirming some swing failure pattern opportunities. So if you guys held those positions, you would be looking pretty damn good right now. We'll speak about the next positions here as well, but how could we have known here that the bulls were actually trying to at least set in a little bit of a structure? Because what we focused on over the last 2 days, even though we did dip to the downside, was that we wanted to see a base built by the bulls at the very least for us to give for it to give us some confirmation potentially to the upside, because of course building a base after dipping to the downside is very, very important. So I'm going to show you guys a chart that I posted in the Discord group today to help you guys understand this a little bit better. So if we go ahead and take a look at this, we were looking at some higher lows inside of the range. So after having that swing off the lows here, a failure swing pattern off the lows, we did come down to the bottom of the channel. We did end up moving up here, and every single dip that we saw to the downside was in fact a higher low. Yes, we were still inside of the range, but you can anticipate these moves before we end up breaking to the upside, potentially by looking at the structure of the price action and by seeing if the price action is at least trying to build a little bit of a base. So as you can see here, we came down, a little bit of a higher low. We ended up moving up here, creating a higher high based on this high right here, coming down, creating another higher low, and then a higher high with another higher low set inside of the range. And as you can see, we did move up from that higher low inside of the range. That did come with some very nice confluence on the charts as well, with, of course, the daily pivot here, and, of course, a little bit of a move to the median of that channel as well before creating another higher high. Now we have found acceptance back into this range, as you can see. So if I get rid of the VPVR here and make the chart a little bit cleaner for you guys, we can see that we have hit the median and we are slightly rejecting from this region. That is also where the R3 is. We know that that's typically not going to break on the first go. That's around $34,765. So we would need to get above that to actually test the top of the range. However, right now, this has already been quite a nice move. So if you did pick up longs, let's say on this last higher low and completely ignoring every single other higher low, then that is already a 4% move from 33,300 all the way up to 34,600. Now, I want to actually speak about this a little bit more here because we spoke about the exact same setup inside of this range. Now, this was inside of the range once again, and we did set in high lows with consecutive high highs coming in, and that did give us a very nice sense that we were at least going to break to the upside. So literally the exact same setup as we spoke about earlier inside the week. Of course, we did end up rejecting from that region, but that was still a nice opportunity, and then a nice trading opportunity afterwards coming in with the short positions there as well. But now we've had the same setup inside of this range, as you can see, some high lows before breaking to the upside. So I do very much like that. Of course, we need to consider here that it is a weekend. There is no reason to be, at least for me, using high position sizing or even trading on the weekends as much. I've been backtesting our new indicator that we have for the group here over this weekend. So I'm very interested in that. I just want to backtest that. I want to be able to get as much useful information on that right now, but we'll go through those trades a little bit here as well. Of course, that gave us a very nice long position with some confluence down here as well. Now, I want to go on to the 12-hour here, because this is what's going to be very interesting. So the 12-hour, of course, did reject from our major resistance point here from the 3rd of May. There are some major highs in the market. That was actually started around 59,000. The second rejection was here at 41,000. And then once again here around $36,000. So coming down and actually maintaining these lows is going to be very important for the bulls, because now we have actually set in a higher low. If we go on to the daily, we spoke about this potential higher low structure being set in. And of course, if you did miss the long positions, remember that staying patient here is going to be much better, since price action has actually bounced up quite a bit right now. But since this is a high time frame, and if this higher low is going to last and we do see more momentum come into the market, let's say the start of next week, there's going to be optimal opportunity to actually get into long positions and be able to maintain above those long positions. So where was a key resistance point for us based on the daily? We wanted to see us get back above that $35,000 level, and that would be also testing our bearish order block that we had been trading over this last week as well. So we would need some solid open enclosures above that monthly pivot into this bearish order block. We would need to be watching that very, very closely. Yesterday, of course, as well, we were looking at the CME chart here. We came into the area of interest that we had, right? So let's go on to the very low time frames here, such as a 30-minute, and take a look at this. So as you guys can see, we did set in some very slight higher lows here, but basically we did come down into that CME gap. As you guys can see, we had a nice CME gap. And since we were coming down on very low volume, that was a good sign that at the very least, the bulls were starting to come into control, especially with our lower time frame momentum oscillators turning up, right? Because once we do come to such a key support region here, a base from basically the gap from 32,760 all the way down to the weekly pivot, and we come down on very low volume, basically declining volume here, that is a good sign. And this is what we really focused on in yesterday's video. We don't want to be seeing on a move to the downside, we don't want to be seeing declining volume and actually declining open interest. This was showing us profit taking as well, right? So that was very important to watch. I want you guys to be definitely watching these to confirm potential further moves to the downside, right? But we got no confirmation for further moves to the downside. Simply came to our big area of support on the CME chart. I would have very much liked if we actually did test a little bit lower as well for some high time frame areas of interest on the spot price action, but the CME did definitely get that one well with, of course, the momentum oscillators and also the volume and open interest, which we discussed. So now I do think this is a little bit of a weekend move. I wouldn't get too excited on weekend moves, as CME did close at 33,285. So once again, we will have another CME gap to be watching. But this is a nice save for the bulls, and this is definitely a good sign coming into next week if the structure is held here. So very, very important we watch our previous range, since we have acceptance back into it on the lower time frames. As you guys can see, this was our previous range that we broke out of, but we've simply set in a hammer candle on this next daily closure and now pushed up. So it's very important that that low now is protected. So let's take a look at it. 32,646 as a major support region in the market that needs to be protected by the bulls. Of course, we do have a CME gap now, but I wouldn't just be trading for it blindly, and I wouldn't just be going short just because there is a CME gap. We need to wait for those confirmations, and once we see, for example, a market structure loss by the bulls, lower lows and lower highs being set in, then we can go short. We had a very funny comment as well in yesterday's video, something about being enthusiastic as well is not being realistic or something like that. But I was simply talking about some bullish factors that I saw on the charts. I mean, we were in short positions from $36,000 or for the past week, really. We had shorted every single high in the market because we had lower lows and lower highs. The structure was to the downside. But yesterday, we saw some more signs coming in, new signs in the market coming in, such as some bullish factors on the lower time frames, momentum potentially flipping, and low volume on the moves down. So I tried to give you guys my most realistic analysis, right? I tried to give you guys my thoughts based on what I think is going to happen. I may not always be right, but I tried to give you guys my unbiased opinion, right? So if we are in a downtrend and I am seeing some signs of bullishness, or I am seeing some signs of strength potentially by the bulls, I will speak about it, okay? At the end of the day, I'm not here to tell you guys what you want to hear. I'm here to tell you guys my most honest analysis on the charts. So I hope that you guys at least appreciate that and understand where I'm coming from here. So like I said, the R3 is typically not going to break on the first go at 34,765. We have come up to that. So this is a major resistance point that we need to get above for any further upside. But since it's the weekend, very low liquidity, a lot can happen. Let's take a quick look at the open interest here. On the 5-minute time frame, we're seeing the open interest actually dip on this move to the downside. What does that suggest? A potential short squeeze going on right now. This doesn't suggest a sustainable move. Of course, after we set in our high low, this did suggest that indeed, right? We had some bullish divergences as well, but on the move to the upside, you're seeing a high low be set in and open interest slightly rising, which means that at the very least for the short term, there's some nice longs being put into place here. And now this shows us a little bit of a squeeze, potentially, shorts getting liquidated, obviously, and some longs taking profits inside this region, since it has been a nice move to the upside. But it's not the end of the world. We just need to wait for that confirmation on the lower time frames. I personally wouldn't be trading, a long just at resistance here if you've missed the move, and I definitely would not be trading short either until I see something telling me to basically trade a short, right? If we had tested this R3 potentially, but like I said, I didn't really want to trade on the weekend, but I've been doing some back testing and on our new indicator that we're going to have for the group, but it is a little bit far away here as well. So let's go on to a few trades and speak about these. So this morning, a little bit of a short position right at the top of the range. So as we can see, 33,700 closing at 33,400. That was simply a resistance trade, right? We came up to 33,800. That was the top of our range. As you can see, I'm going to trade the top of the range. We came back to support. We had seen that high-low structure be put in. I posted a chart from our new indicator as well, which I will not show here just yet. But overall, that did make for a nice long position, but I am just recording statistics on that. So this was quite a measly trade in terms of the size of it, because I am backtesting a few things, trying to get into as many trades as possible and recording those statistics to send off to our developer here. So taking a look at 33,400 entry and around 34,164 closure. Now price is above that, but like I always tell you guys, I try to get a nice chunk of the move. I don't try to aim for absolute highs or bottoms in the market. Like I said, that was a small trade, so definitely not like the normal trades that we have, but it is the weekend. We are back testing, and at the end of the day, just trading this structure here. So let's now go on to the Link USD charts and take a look at this. So Link USD having a very similar structure to Bitcoin. We did come down to the lows, but as you can see, we did try to build a nice base. We in fact did end up breaking the downtrend right here. All right, we ended up creating a higher high. We came down, we set in another higher low here, and then now another higher high. And just like Bitcoin, we came down near that daily pivot. We in fact did lose it, but whatever this horizontal is here from. Okay, so yes, this horizontal is here from probably our analysis recently, and it is probably just saved on the chart. So as you can see, it's come down to the 1791 region. It did go below the daily pivot, but ultimately back on support, setting in a higher low, and higher highs. That is a bullish structure in the price action, and now moving up from the daily pivot. What's your general target on the lower time frames if you are trading the daily pivot? It's going to be the R1. That is where you're generally going to be taking profits, at least your take profit one. Not financial advice, but that's what I would be looking at. And right now we've had a slight rejection from here, so the 1858 region would be the level to reclaim on the lower time frames. Of course, we can come down for another higher low, but if we do go up for another higher high here, that would be the R1. Like I said, I'm not very interested in this. It is the weekend, guys, and ultimately I don't really trade on the weekends usually anyway. But putting in a few small trades here, as I was behind the PC doing my taxes and back testing the indicator, but definitely not trading the Chainlink charts here. So we're going to have to see if we can close above that 1858 region. The next target would be the R2 here at 1892. But based on holding the 1791 support that we have looked at here, probably from our analysis, we would need to be looking at a major resistance point up here, just above the daily R1 at the moment, 1958. I wouldn't get too excited on price action until we can reclaim that. If we can reclaim that, then I would be looking at a move all the way up to the $20 highs. So that would be a region to keep an eye on. If the market structure here does hold and we don't see a bearish structure be put in and another rejection from these highs. So let's go on to Ethereum at USD. I want to make this video as short as possible here since it is Saturday. Don't want to keep you guys waiting too much here. Ethereum, a beautiful chart. Actually, I haven't looked at this today, neither Chainlink, but built a nice little bit of a double bottom here. Started that uptrend, took out the last lower high once again, came back for a higher low here, and then a higher high. And where did our higher low be set in? It was right at the daily pivot. So that would be a very low risk trading opportunity. We didn't even close below it, just like we did on Chainlink. And now we're driving to the upside to the R2. So closures above the $2,199 level could take us all the way to 2,253. But as for all of these coins right now, it does look like a squeeze as we do not have volume coming in. So like I said in yesterday's video, we were looking at slight moves to the downside with zero volume, which shows us that's more bullish than it is bearish, right? Because we've come back to support and we have virtually no volume by the bears. And we just have a little bit of accumulation by the bulls potentially. And now we're seeing the same thing here. We're seeing a move to the upside, but it's on very low volume. So this could be perceived as, by many traders, as a little bit of a squeeze to the upside, taking out those short positions that did come in at the lows yesterday. And it is a weekend move. So definitely keep that in mind, guys. There's no reason to be getting into big trades. There's no reason to be getting into reckless trades on the weekends. So thank you guys so much for watching today's video. Leave a like on today's video if you have enjoyed it, and subscribe to the channel and click the bell icon. If you would like to join the private technical analysis group, go ahead and send me a message on Discord. Have a lovely rest of your day, and I will catch you in tomorrow's video.